Here are some surefire ways to save big on car insurance in 2024. Car insurance has spiked, and as we look at the rates so far this year up to April 2024, they're up over 12%, and that's per the U.S. Bureau of Labor and Statistics. What's behind the spike in auto insurance? Well, there's been a sharp rise in accident frequency and severity since the pandemic began, but more distracted drivers and an increase in litigation claims, plus the cost of electric vehicles, has all added up. And more expensive medical treatment for accident victims, increase in purchase price of vehicles, and the escalating cost of car repairs in general. That's what's causing the rates to increase. But further, more technically advanced cars cost more to repair, especially with the all-new technologies and safety features all come at a higher price. And that means insurance rates go up. Now consider the cost of vehicle repairs has escalated 45% since 2019, primarily due to supply chain disruption, parts shortages, rising labor costs, and that's according to the Insurance Information Institute. Despite rising insurance rates, insurers can continue to experience significant underwriting losses due to accidents, that, of course, and inflation. Add this to the data collection and sales we have covered over the last few episodes, and all this leads to higher insurance rates as they track you and take your data. Now, chances are you'll be charged more to insure your car going forward, so be prepared for that. But there are several avenues you can explore to lower your out-of-pocket insurance costs. Shopping around for the best rates and getting rate quotes from at least a handful of different carriers and comparing prices carefully. Be sure to compare both the coverage and the price. Also note that there are general deals offered online. Many insurance companies now provide some discounts for purchasing a policy over the web because you're buying directly from the company and not through a broker. So look at sites like Get Jerry to see if you can do some comparison shopping. Now, you can also bundle your policy, purchasing home and renter's insurance as well as your auto insurance from the same insurer can yield up to 25% premium discounts on both policies. So take advantage of those benefits from multi-vehicle coverage, and insuring more than one vehicle in your household on the same policy can trigger again up to another 25% premium discount compared to purchasing separate policies for each vehicle. They don't add up, but each policy group could save you some money. Now, maintaining a clean driving record with no claims, which could result in a 10% savings. Most insurers will reduce your rate every time you go 3 years without getting in an accident. And the best way to get the cheapest insurance is to have a clean record for at least 5 years. And at that point, you should see discounts from your provider on your renewal. You can also opt to pay for your premium in full versus monthly or periodically, and this may lower your rates up to 15%. Make sure to call your insurance company and ask for that discount. Another way to save money is choose to be billed electronically versus a paper bill. Now, this is a good way to possibly benefit from 5 to 10% discount. They're all asking for that, so make sure to opt in for that and check your inbox so you don't miss your insurance payment. Also, you can raise your deductible. Now, the higher you choose the deductible, the lower your premium will be, but just be careful not to make it the deductible too high, because if it is, you won't be able to afford any repairs. If you have an accident, your deductible cost comes out of your pocket, so set some money aside just in case. You may save another 10 to 25% if your young student driver maintains a B average or higher. That's where studying actually pays off. The same discount may apply if you have a distant student who attends college and drives at least 100 miles from home without a vehicle. You will save money. You can take a defensive driving course, which is a great way to save 10%. Looking into those driving classes held in your area that are offered point reductions, it is worth the investment and your time. You can purchase auto insurance through an alumni association. Premiums typically run 5 to 10% below standard policy rates when you choose this route. Improving your credit score actually can lower your insurance. Credit history is allowed as a rating factor in most states, and consumers with poor credit typically file more claims. You can improve your credit score by paying your bill on time and in full, not applying for or opening any new credit cards, and closing any of those existing ones that you're not using, and not maxing out your credit limits. all follow to give you the best credit and a lower insurance rate. Sign up for those usage-based telematics programs, which are offered from the carriers. I'm not a fan of these because they're collecting all your data, but that is a way to save money. This is where you allow your insurer to track your driving habits via mobile app or through a plug-in device. Again, I'm not a fan of this because you know they're collecting more than just your driving habits, and that is really important. But it is a way to save money on your insurance policy, and if you tend to be a super safe driver, you can save some money. But remember, these devices include tracking the time of day you drive, how far you drive, your braking, your acceleration patterns, and whether you engage in distracted driving behaviors. However, the move can save you up to 40% on your bill. It's up to you to find ways to save some money, but there is some ways to save money on your bill. Don't forget to shop around every 6 months. If you like this video, give it a like and subscribe for more videos like this one. If you have any questions or comments, I'll be more than happy to answer. You can support me by buying me a cup of coffee. The link is in the description, plus all the links for our website, social media, my book, and our podcast. I'm Lauren Fix. Thank you so much for watching.